We counted 5 waves down in the IWM 60-minute 120 bar chart, and we can see that price moved up as we would expect after the completion of 5 waves, but then immediately started down again. And that suggests that one of two things is happening. Either this complete 5 waves is going to turn out to be only one to an extended third wave, in which case prices will go much lower than they are now, or this false breakout, or this breakout is false, and that prices will go back up to retrace maybe 38 to 50% of the swing from the August 5th high to the low that occurred on August 27th. And we don't know what that is yet. But how do we prepare for that? How do we deal with that? Well, let's go back. We're using our 130-minute chart to manage our campaign. And the first thing we want to do is we want to put up our breakout prices. And from our 130-minute chart, we can see that the price level at 100.51 is a breakout price. We can move over back to our 120 bar chart and do the same thing, put up the breakout prices, and 100.51 is the breakout price. Now, to take a breakout price, there's one necessity, that you have to be clear of the breakout bands to take the signal. And you can determine based on your own risk parameter if you want to take a simple penetration of that price level, as did occur on this bar, or a close in your 120 bar chart window as your entry signal. That's entirely up to you, and that depends entirely on your risk factor. But right now we do have this setup that 100.51 is a sell signal setup price for the IWM. And if you're following a close only mode, then when the market opens again on Tuesday, the day after Labor Day, if you get a 60-minute close below 100.51, you're going to establish a new short position in the IWM. And for a stop, you could use, well, depending on your risk parameters, you can use the previous breakout price high, which is 101.36, which will give you, less than a point of risk. Or you can use 102.36, which expands the risk a little bit, provides a lot more room for error in case prices do run the other way shortly. And that would enable you to establish a new position with a known risk tolerance level. And then you would update the chart a couple times during the day, depending whether or not you have the time to do that, or you could do it at the end of the day. But the point behind swing trading is that you're not sitting in front of your monitor all day trying to catch ticks. You're not making decisions during the day. All your decisions are made the night before, or at the latest before the market opens the next day. You know exactly at what price levels you'll take a new position, and you know exactly where your stops are going to be for that day and for much longer. It could be weeks or months that the swing will take place. But in subsequent videos, we'll go into all this in more detail, but just wanted to give you an overview of the difference between the analysis chart section, the campaign chart section, and how you can use the information you get in the analysis chart section to actually set up trades and manage them in the campaign chart section. Hope you found it useful.